Beck, we have a chance to talk about, AIG and what we need to do, because to be able to, to write that many insurance contracts, Warren, and not to put up any collateral, that's got to be something that regulators at this point, right? I mean, that's why we're in this mess right now.
I wrote Congressman Dingell in 1981 about it when they were. They
about
are dangerous.
AIG or about derivatives?
It was actually about trading the S&P 500 and what the dangers you get into when you allow people to leverage up like crazy, which derivatives allow you to do. We put margin requirements in the United States after 1929. We said that 29 was a terrible crash. It was partly brought on by the stock market, and that was partly brought on by the fact that people were buying stocks with very little down payments. So the United States Congress said to the Fed, you regulate this thing. That's been 75 years ago. They still regulate it, but derivatives enable people entirely to get around margin regulation. They made them meaningless. And so we leveraged up the system, and we are now feeling the pain and the spread out of the pain to people who had nothing to do with it from the deleveraging the system. And it's massive. So we need something new.
Part of the reason AIG was able to do that was because it's high credit rating.
Absolutely.
At that point.
Yeah.
You're not suggesting necessarily they changed the rules on how much people have to put down based on their credit ratings, right? You benefit from your AAA credit rating.
Yeah, although you benefit less these days than before. But AIG had this AIG Financial Products. When I bought Gen Re, they had something called Gen Re Financial Products. They had 23,800 contracts. Hell, I couldn't understand, 22,000 I'm probably spent, and I know I couldn't get my mind around it. And people recorded a little profit every, that section made a profit every year supposedly, and the guy that ran it made a lot of money and everything. It probably would have busted the company if they'd kept it around. Anything where you use the credit of a great institution to go out and start doing all kinds of things that on enormous leverage gets you in trouble. Citigroup could do SIVs because everybody trusted Citigroup, and nobody even knew that, all this stuff was off balance sheet. It was a way of getting around capital requirements. You have to watch people that handle big sums of money.
Okay, well, we have a lot more to talk about this morning. In fact, when we return on Squawk Box, we will be back inside the mind of one of the greatest investors of all time.